Well, investors bought more than just presents over the holidays as gold rallied into the new year. But can this keep up? Joining me today is Will Rhind, CEO of GraniteShares. Will, welcome back. Happy 2019 to you.
Happy New Year to you.
Okay, let's talk about those gold ETFs. Looks like while many of us were sleeping over the holidays, gold ETFs climbing at an extreme rate here. 76 tons added in December. What's going on here?
Gold has had a great start to the year, and I think we can certainly say that gold is back, back on the agenda of investors. This is now the highest tonnage or investor held levels of gold ETF since 2012. So you think about that 7 years, that's almost the entire length of the bull market in equities. So we're back at those 2012 levels. And this has been a great start.
Well, gold is back. That is going to be music to so many investors' ears out there, Will. What makes you convinced that it can hold pace here?
I think it all started going back to Thanksgiving last year. We had a big spike in volatility, an equity market that really started to swing around, bond market showing volatility as well. And although that came back a little bit towards the end of the year and the start of this year, we've seen the worst start to the year for the Bloomberg Dollar Index, on record. So the dollar really taking some hits, and that has been a good thing for gold.
So if the investment demand portion or part of the equation is back, is that enough to get gold to its last greatest highs of 1900?
I think that, certainly from GraniteShares' perspective, we've seen some very strong inflows starting the year into our gold ETF, BAR. And that is kind of really, I think, telling the story that the investor or the asset allocator is now ready to start making allocations into gold. Whereas I think in Q4 was a bit of a wait and see approach. But I think now investors are coming back. Investment demand coming back is strong. You've got central bank buying in the market, which some significant players, first time since 2016 for the Chinese.
And I want to talk about that more with you. As you mentioned, the Chinese and Russia adding to their reserves here. Do you think we're paying enough attention to this story here?
We're not, and it's not something that really gets talked about enough, and it's kind of lost because a lot of the time we're talking about jewelry demand, and even on the investor side, we haven't really had a chance to talk about investment in a material way since the highs, back in 2011, and then the gold holdings on the ETF side since 2012. So things are starting to come back now. We're seeing that waning in sentiment. Global growth certainly starting to slow down. That's not great for equities, not great for bonds, especially in a rising interest rate environment. And I think with gold, this is a positive start for the year.
And finally, with the government shutdown, what has that done to investor sentiment?
I think, again, the government shutdown probably hasn't done that much at this stage. I think that if you think back to when gold made an all-time high, there were concerns that the shutdown, there were some implications about a actual default on the U.S. debt, which would obviously have been a significant event. That was more important, I think, than the actual shutdown itself. But for now, I think the shutdown is just sort of something that is not really going to affect the gold price at this stage. It's more about the dollar, more about the slowdown, more about the increased volatility, and investors looking for that safe haven or looking for those investments which are not correlated to the equity or the bond market.
I had Peter Schiff on earlier, and he said this economy, it's not right to say it's volatile, but rather he would say or says it's in a bubble. Do you agree with that statement?
I think that there are a lot of people that have been saying that asset prices have been in a bubble for some time. I think that the U.S. economy, some fundamentals still look quite strong, but typically what we have seen is asset prices in previous cycles tend to peak before we see an underlying peak in terms of stock market or underlying performance. So I think that's kind of where we are. I think the slowdown in terms of global growth is certainly something that I think is real, and that's starting to manifest itself in a weaker dollar. I think the Chinese economy slowing down, we've seen that in Apple earnings, and I think that will result in the Chinese central bank easing, which is good for commodities and good for gold.
All right, for now, as you said, gold is back. I'm sure a lot of investors will take that and run with it. Thank you so much, Will, for joining us. And thanks for watching. We'll have more for you, so stay tuned.